Hello subscribers. So I wanted to just go over my trading system and to just quickly summarize what it is that I'm doing. So a few things here. So this is number one. I prefer to trade on daily charts, and this video applies to stocks. So this is Costco wholesale, and the video for forex, commodities, or cryptocurrencies will be different, will be separate. So this video only applies to stocks, and specifically it applies to stocks on daily charts. Now, what does daily mean? That means that each one of these weird looking candlesticks, red or green, is 1 day's worth of activity. You can see where I'm hovering, it says days. So make sure it doesn't say hours, minutes, weeks, or month. Make sure it says 1 day. Very important. So once you have that set, you should be able to apply my indicators. So on this chart, you see two indicators. One is MasterCharts Trading Price Action Indicators, and the other one is ATR. So if you have access to my indicators, then you should be able to apply them. ATR is called average true range. It's the same, you can find it in a library right there, average true range. It's a free indicator, and it simply shows how much does the stock move on average, up or down. We don't know which way it's going to move, but it just shows you how much it is going to move. So today, for example, when I'm recording this stock on average is predicted to move around $6.87 because this is a pretty expensive stock. It's $387. We're looking back right now at the June of the 2020. So you can see that stock was already above the blue line, but then it came down towards it, touched it, and closed above it, where I'm hovering right there, 23rd of June. So at that point, we should be able to, go ahead and buy it, basically. So the system is this: buy on close above the blue line. So either the stock was below it for a few minutes or a few seconds, a few days, and then closed above it, and then we're going to buy it there. We're going to set our initial stop on close below the yellow line. So this is the distance of our stop from the blue line to the yellow line. So once again, this applies only to daily charts for stocks, specifically stocks. I will cover forex in a separate video. How many shares to buy? So this is called risk control. In order to understand it, we need to use another tool. So this tool is also free, and it's right there where I'm hovering. It's called long position. So we're going to grab the long position tool, and we're just going to click anywhere. I'm going to make it a little bit smaller so it's easier to see, and we're going to move it where we're buying it. So in this case, we're buying it like around $300 right there. Now, the stop, I want to drag my stop to the yellow line. So there's my stop. So I dragged my stop to the yellow line. Now, additionally, if I click on it, this interface will pop up. So you can see that on this interface, there is this settings button. We're going to click on that, and you're going to adjust the account size to your account size. So you're going to put, let's say your account size is, $100,000. You're going to put in $100,000. I usually send out alerts based on a sample size of the account as $100,000. The other very important thing is how much risk are you willing to tolerate. So this is a concept. Risk means if you're wrong and the trade goes against you and you're forced to exit at the yellow line in this case, how many dollars or how many percent are you going to lose? So I normally keep this at 1%. Some people are okay, risking 2%, 3%, or some people are even okay risking 10% of their account. Now, but remember that the more you risk, the less opportunities there are to trade because you can spend your entire account on risk. So I prefer to keep my risk small at 1%, and this I'm going to keep it at 1%. Practically speaking, if you have a $100,000 account and you're forced to exit here, you will lose $1,000. It's a manageable loss. It's not a big deal. So in this case, notice where it says quantity, QTY 33. So this means that on this date, on 23rd of June 2020, when we were buying this stock, Costco, and we had a $100,000 account, and we were okay risking 1% or $1,000, we can only buy 33 shares. If we were wrong and the stock dropped against us and went to the yellow line and we had to exit, that means we would only lose $1,000 provided we only bought 33 shares. Now, some people, again, like to risk more, so I'm going to show you that if we make it 2%, this will become 66 shares. So I don't like it. I like to keep it small, but instead open more positions. This is just my preference. So this is it. Buy and close above the blue line. Then we're going to set our initial stop and close below the yellow line. We're going to set our target at 2 times average true range. So this is where that other indicator comes in, average true range. Back then, on the 23rd of June, the average true range was about $5.11. I'm reading it off on the left here. You can see where I'm hovering, it's like 508. So what we need to do is we need to adjust our target to around $10. And you can see it's very manageable. It's barely there. So there's where our target was, around $10. So on June 6th, or maybe June 7th, our target was reached. At that point, we're going to move our stop from the yellow line to our entry. So at this point, our target was reached. We moved our stop to entry. We are guaranteed a no loss. So at the very least, we will not lose any money. I also prefer to take some profit. So at this point, I sometimes or quite often sell about a quarter of my position. So this way, I actually have a profit. And because I advanced my stop to entry, I am guaranteed no loss. And if I took profits, obviously, I'm going to have some profit. And basically, this is it. We just sit in a position and we advance our stop. And I usually trail at the blue line itself. So trail at the blue line, and you can also take profits along the way. So another good place to take profits is, let's say a stock closed above the green line and then closed below it. So an excellent place to take profits would have been right there on the 4th of September. And then maybe another time right there on the 29th of October. And then another time here on the 10th of November. But some people prefer to not take any profits and simply continue trailing at the blue line itself. And sometimes they just keep going and going and going. Those stocks, they just sometimes keep going and going. So it's really up to you, up to the trader. I like to preserve my profits, and therefore I like to take profits and advance my stop and just be at no loss at the very least. This is psychology of trading. So this is a successful trade. Now, let me show you a failed trade and what happens if we do not honor our stop, if we do not exit at our predetermined exit. So this is actual trade. I entered back here on 19th of July. The trade didn't go in my favor. The trade failed. So I exited right there on September 19th at about 6.5% loss. But if I didn't exit there, my loss would have been another 38%. You see how much it continued lower? So psychologically, this would have been devastating. And also, it would have been really bad for my account. Because even though I only risk at this point 1% of my account, here my loss would have been a lot bigger. So this is psychology of trading. I'm trying to kind of hammer this in. If we have a stop, as our stop is hit, we must exit. All right, so hopefully this helps. If you have any questions, please send in a question to Alex at MasterChartsTrading.com. And if you have any comments, also let me know. All right, thanks for watching. Bye-bye.